Been watching you all day. It's good having these name tags because then we know who one another is. If you want to stay around and make more friends afterwards and hear what everyone else's analysis and take is, as I think I said to most of you that were in the room before, that Stewie has very kindly put on drinks. He's only put them on for half an hour, and you may think that's being a bit stingy of him, but we can blame the day of mourning for the Queen, because we all have to jump on a plane and take off for Melbourne, because our conference that was going to be on Thursday is now tomorrow, so we all have to work like mad people tonight to get there and get it all set up. And while I'm talking about that, something too to remind you, those of you who are investing, not our presenters, the last lot of presenters today, so in this particular session, are also our first lot of presenters tomorrow in Melbourne. So the market closes at what time today? 4 o'clock, and it opens tomorrow morning at about 10ish. Yes, correct. So if you hear anything that you like this afternoon, post 4 o'clock, obviously you're not going to have a chance to jump on, and the people in Melbourne will have already heard by 10 o'clock, so you want to jump in before they have a chance to push any prices around and get whatever it is that you think that you might be able to get. So jump on board and take your notes, etc. All right, are you ready for our last session, everyone? Fantastic. And our last speaker today, as I said to, is Alex Tonks, who's head of CRU Australia. He's going to talk about the minerals, the batteries that are supplying the modern world as well. So lots to hear about. Right. Let's go back to the start. John Price, would you like to come and join us up on stage, sir? So let me give you a bit of a teaser about this speech that we're about to hear. I want you all to imagine, if you can, a homegrown corridor of mine to metal, to building batteries right here in Australia. Richmond Vanadium is looking to play its part in this story. And this fella here, non-executive director, Mr. John Price, is going to talk to us all about it. Would you please make him very welcome?
Thank you. Thanks, Chrissy, and good afternoon, everybody. Certainly the critical and green energy metals thematic is a hot topic around the world, and I think Australia has all of them in abundance. So I think we've got a phenomenal opportunity in this country to actually play a key role in the green energy transition across the globe. I think we've got to get our model right. I think we've got to be more self-sufficient in these minerals going forward to secure our own supply, and we have to move further and further down the value chain as we go forward into essentially a new era. The usual disclaimer, if you want a copy of this presentation, we've got a QR code out of the table there, not too many paper copies, but please feel free to go and scan the presentation as we go forward. Just for your information, we will have the IPO prospectus, our upcoming IPO. The prospectus should be out in the next 3 to 4 weeks, so keep an eye out for that. That'll have a lot of information and a new presentation going out as well. Don't need to talk about him. So today I want to introduce the Richmond Vanadium project, 100% owned by Richmond Vanadium Technology, ticker code to be RVT. I'll talk about the uniqueness of this deposit, not just the immenseness of its scale, but its simplicity in its geology and its straightforward processing pathway to 98.6% battery grade vanadium pentoxide flake. Vanadium, historically, spanners, rebar, construction and specialty metals, about 130,000 tonne per annum. The last time I checked, annual production. The new demand, where is it coming from? It's coming from the vanadium redox flow battery industry. It's not a pipe dream. We see small, medium and large scale deployment of these batteries globally, from the largest battery in the Dalian area in China, medium size with our friends at Invinity in California. And we are making electrolyte and we are making vanadium batteries right here in this country, yet we don't produce a kilogram of it yet. If you take Bloomberg's numbers, 1 terawatt hour of storage by 2030, that's a lot. If the vanadium battery plays in 10% of that deployment, we will be needing 1 million tonne of vanadium pentoxide to deliver. So all of our emerging producers and the guys following me, we all need to get up and away, and we need the support of government, which we are certainly getting, and support of the investment community in this country and globally. Our PFS is completed, high quality PFS. We'll be delivering around 12,700 tonnes per annum. That is around 10% of global world supply. We have a fantastic jurisdiction, and we have very, very simple geology that I'll walk you through that make this project unique and allows for very simple conventional processing and low capex and opex. A lot of test work's already been done, and we've got a small but very technical team taking us forward as we complete the bankable feasibility study by December 23. So we're in North Queensland. We've got 1,400 square kilometres of tenure in 3 main areas. We have a global resource of 1.8 billion tonne, grading just under 0.4% V2O5. We are the first vanadium project in the state to be given coordinated project status. What does that mean? State government holds our hand through the environmental permitting process. A lot of the field work has been done. We're now moving into the paperwork with the support of the government agencies. Here we are in between the port of Townsville and the mining province of Mount Isa on the major highway and the major railway, HV, water, services, all in close proximity from the town of Richmond, which you can see in here, and the project tenure highlighted in green. Won't talk to this slide too much. We have 3 large resources. We're focused on one. So I'll draw your attention to the Lilyvale JORC indicated material, 430 million tonne, grading 0.5% V2O5. That is the topic of the pre-feasibility study. That's where our reserve comes from. And that reserve alone has a mine life of over 110 years at current production rate. So why is it unique? What's so different about it? The cross-section you can see on the right-hand side essentially shows the ore body. It starts at surface and it stops at 21 metres depth. This is an oxide sediment material. So nature has done the vast majority of the work for us, and it is essentially a supergene enrichment zone that can be dug up with a loader. Very simple mining exercise. This has a 1:10 compression ratio, so you can see the consistency of grade 0.5, 0.6, 0.7 as we go through the enrichment zone. So very simple mining, taking us through to a concentrate at site. So the reserve, 460 million tonne, 0.5%. The starter pit has a strip ratio of less than 1:1. We've got a very low mining footprint, so we'll be essentially working on a square kilometre as we go. We'll be progressively rehabilitating behind ourselves. So our mining footprint is very, very low, very, very simple, easy to get out of the ground and easy to concentrate. Met work, 4.5 years of metallurgical test work has been conducted and completed at the Hunan Research Institute in China and the Beijing Met Labs. We've had our own engineer supervise that for 4 of the 4.5 years, day in, day out, making sure we get this flow sheet nailed, and we have proven it. It is conventional. So we're very fortunate, again, that nature has done a lot of work for us. It allows for simple flow sheet design, proven conventional equipment to get us through to our final product grade of 98.6. Won't talk to this slide, but you can see the essential difference in the geology and the metallurgy makes. We don't need a lot of major capital components to actually get to our final product. There is no drill and blast. There is no milling required. The concentrate step is really physical separation from screening, trommeling, and reverse flotation to get to that concentrate grade 1.8 to 2%. In the world of vanadium, not nickel or copper, the highest concentrate on Earth is around 2.2%. Our target is to get to 1.8 to 2% concentrate grade at around 750,000 tonne per annum and get that down to Townsville for downstream processing. So if you look at the major key steps that this ore body doesn't require to get to product, that's what translates into very attractive capital numbers and very attractive operating cost numbers. So this was the pre-feasibility. A couple of comments about it. It's 15 months old. That capital number is going to change, and in the cost escalation around the world, it's not going to go down. The other thing that I'll point out is that the economic analysis drove the concentrate offshore for refining in either Malaysia or China. That's a $70 million differential in capex. We don't want to send bulk concentrate to another country and buy it back as a battery. We want to refine it and produce final product here in Australia and in Townsville, and we have the means to do that, and certainly the government support to enable that to happen. So from a CapEx point of view, let's talk about 300 to 350 million Australian to get this project up and away from mine to final product, railing down the concentrate and having downstream hydrometallurgical processing plant, acid leaching plant essentially, as our downstream process. OPEX sitting in the first 10% of global cost curve. So we're sitting around $6.30 US a pound. And obviously, based on those metrics, we have a very strong NPV, very short payback period, and a very attractive project from an economic standpoint point of view. And think about the mine life. We've only just worked on the first 25 years of the first of three of our reserves and resources. So this is a very, very big project and easily scale upable from 12,500 to double, to triple, to quadruple. Let's see the supply and demand equation as time goes on and as we complete our BFS. Pricing, we talk about where do you get the price from? You get it from off-takers and you get it from discussions from people who are actually buying the product. Vanadiumprice.com uses a number that is essentially a formula from the ferrovanadium space. And just on that, ferrovanadium, that's great, it's needed, it's necessary. It's 80% vanadium pentoxide. If you want to purify 80% ferrovanadium to 98.6 battery grade, you've got to spend about $5 to $6 a pound to get it from there to there. That is our total OPEX. So we see a quite attractive set of economics. Here's the summary, and again, I won't talk to the slide too much. We're going to be working on the bankable feasibility study post-IPO. We've commenced our approvals process, obviously, and by December 23, we want to be making an investment decision for a construction period through 24 through to first production in 2025. This is a comp slide. I won't talk to it. That is for your information and for you to make your own decisions. But ultimately, we want every vanadium developer in this country to be successful and get this stuff out of the ground and start delivering part of our energy transition solution through the vanadium battery. So a battery, what is it? It's a big battery. It's a liquid state battery. It's not going to fit in the glove box of your car, and it's not really going to compete with portable lithium devices, and that's not what it's for. It's complementary to lithium and other battery technologies. It's grid scale, it's utility scale, and it's scale upable. It has essentially an infinite life in terms of the electrolyte. It has a life purported around 25 years, and you just have to change the container that the electrolyte's in. The electrolyte will charge and discharge infinitely. Very scalable. It is cold. It doesn't have any thermal runaway. It doesn't have any thermal output whatsoever. So very stable, and it's for stationary grid, microgrid, and renewable energy storage. That's where it's being deployed as we speak, into China, into Dalian, 800 megawatt hour battery, into California, 3 by 200 megawatt hour batteries. And in Australia, we're building 40 to 120 kilowatt hour modules for remote power applications with IGO, with New Fortune in the Goldfields, and our new partner, Ultra Power, who have an electrolyte license, and they have a battery making facility that is itself powered by a vanadium redox flow battery. So a great opportunity. We have a binding term sheet with Ultra Power, and that is a part of our vertical integration process from mine to battery. So if you look at this very simple, short supply chain, you are going from low impact mining, concentration to 1.8 to 2%, one of the highest in the world, at Richmond, on the rail, down to Townsville. We have our downstream processing plant in Townsville. Over the fence is an electrolyte making plant. Over the fence of that is a battery making plant. That is the vision. That is what we want to do. And the amount of government, state, federal, local and regional support we've been getting has been quite phenomenal. And that, we hope, will translate to bridging the capital gap and a third of our financing coming from the likes of the Northern Australia Infrastructure Fund, Green Energy 2050 Fund and the like. So it's a great opportunity to actually have the shortest supply chain that I've seen all the way through to final battery. Our environmental approvals are well advanced. As I mentioned, the field work has been done. We're working with a native title. We're actually in dinosaur country up here, so we're working with archaeologists to make sure all of our stakeholders and all the important areas that make Richmond, including a large cattle industry. We're working closely with them, listening to their concerns and their opportunity, but this is economic diversity. And it's obviously a lot of political capital to be gained from building a new industry and incubating new jobs in the region. So our environmental process is on target for our December FID. We obviously want to be a great social and corporate citizen. So our ESG we take very important, including green all the way. So the team, it's very small. We have our chairman, Brendan Grills. Brendan's an ex-senior minister and the head of the National Party in Western Australia. He can open lots of doors for us and already has, which is fantastic. The Brains Trust, Dr. Sean Wren, he's been with the project and his team have been with the project since its infancy, for the last 7 years when this process began. So we've got a very stable, highly technical group that know their stuff, with Brendan and I helping out on the corporate and the political side. So we have an enormous opportunity to do something quite special. Key takeaway, scale, CapEx, OpEx, incubation of new industry for the benefit of all of us. So with that, I thank you for your attention.
Perfectly timed, Mr. Price. Thank you so much. Excellent work. All right. Oh, and actually remember, everyone, these guys are actually very technologically advanced over at their stand. So if you want to go and meet with them, you can actually grab their entire presentation by scanning the QR code at the desk as well. So they are uber organised. All the other presentations we'll have available on our website. And as I said, the video presentations, because we're travelling tomorrow, it might not be until Thursday when we have them ready for you, but they will be there. Right. Going west now to the Midwest of Western Australia, where the 100% owned Murchison Technology Metals Project is charging ahead. The project comprises the Gabonintha and Yarrabubba vanadium deposits, which is one of the highest grade vanadium projects in the world, if this man is not misleading me. He looks pretty honest, doesn't he? Right. Technology Metals Australia's COO is this fellow. His name is David English, and he's joining us to update the implementation plans for the Murchison Technology Metals project and plans for 2023 and beyond. Take it away, sir. Please make him welcome.
Yeah, thanks very much, Chrissy, and thanks very much for the opportunity to speak here today. Today, I'd like to introduce who we are. I'd like to, I guess, talk a little bit about our purpose and what we're here to do. Talk a little bit about our project, the Murchison Technology Metal Project, and to share a little bit about our journey that we're travelling at the moment. So there's our usual disclaimer. I encourage you to go to our website, tmtlimited.com.au. All our presentations are available at that location. So in terms of a corporate overview, we have got 210 million shares on offer. Top 20% hold 57% of our shareholding, and in fact, the top 4 hold 39%. So we're very tightly held group. Our RCF, our biggest shareholder, they joined us November last year with quite a cash injection to our business. The other shareholders, BNP, is a syndicate group based out of Perth. Standard Pastoral is a vendor shareholder, been with us since the very beginning, and Redox are very much based in Melbourne as a syndicate group. In terms of just introducing our board, Michael Fry is our chairman. He's been with the company since day one. We listed in 2017. Ian Prentice, our managing director, also has been with us as part of that inaugural directorship. And Sonu, who's now company secretary, he was up until recently a director of our company, and he was with us from the very beginning. We have got some new members to the board. When RCF joined us, Jacqueline Murray came to the board, which is great to add some dimension and strength to the board. And very recently, Dr. Carmen Letton has joined us, in fact, only 4 weeks ago. So that is our board. In terms of the executive supporting the board, myself, I've been with the company for the last 4 years and since the beginning of the DFS. John McDougall is our geology manager. He's been involved with the project right from the very beginning, which gives us great continuity with the geology. And just recently, Alicia joined us as our Chief Financial Officer. So the message here is that we're building not only a mine, a project, we're building a business to support that mine and that project, and a board to support the business. There's growth at all levels. So we see vanadium as very much a key to, the future in terms of renewables, and very much for the drive for reducing greenhouse gas emissions. The traditional steel market has been based on, vanadium market has been to the steel industry. And there is a change in the market, there's no question about that, and I'll cover that in a minute. But in terms of the steel industry, the more vanadium you add to steel, the stronger it is, the less steel you need, and the less emissions. And there's been some research exactly defining exactly the contribution that vanadium makes to the reduction of greenhouse gas emissions in the steel industry. But no doubt the future and the market forces are towards the vanadium redox flow battery and the contribution that that has towards storing renewable energy. I'd like to talk about ESG and some of the benefits in terms of ESG and some of our focus areas for ESG. We're talking about a 25-year mine life. So we are able to talk about real generational opportunity to the regional communities. And that is the local European community, but also particularly the native title holders, the Narryer people. And we're very proud of the relationship that we're dealing and establishing with the Narryer people. But we are focusing on being an employer of choice. When you're there for 25 years, you can really make commitments to, again, provide generational opportunity, not only to individuals, but to businesses. And clearly, with developing a project, a focus on reducing greenhouse gas emissions, but also the opportunities that we open up by creating vanadium and what it does to greenhouse gas emissions. The renewable energy needs long duration storage, and that is a consistent message. And so our fundamental purpose is being part of that journey of creating vanadium and making that available to the long-term storage. Now, long-term storage effectively comes in the form of our vanadium redox flow batteries. We're very familiar with the lithium battery, which we carry in our pocket and is very mobile and certainly used in the electric car industry. But we are talking a different size of battery here now. We're talking about large static systems that can hold power for long duration and can go through multiple cycles. And I guess the whole discussion on vanadium redox flow batteries is another conference in itself. But the purpose of today is just to differentiate between the batteries of lithium and the batteries of vanadium redox flow batteries. It's undeniable that the market is changing, and I guess there's a lot of research on the demand for vanadium as we go through this key battery growth. And you can see there that the transition from steel to batteries effectively driven by having net zero emissions by 2050 and the aggressive targets that have been set for 2030. We can see here that we're going to need around another 150,000 tonnes of V2O5 per annum by 2031. To put that in perspective, our project, the Murchison Technology Metals project, will produce between 12,000 and 15,000 tonnes per annum V2O5. So there's a lot of scope. In terms of the existing market, we are very reliant on China, 62%, and Russia, 16%. So if Australia is going to meet its objectives that we're setting, we need to really source and utilise the vanadium that we have in country. Just to talk a little bit about our project. We are based in Western Australia, very close to Meekatharra. In fact, it's about 43 kilometres south of Meekatharra. We're fortunate we can use all the infrastructure of Meekatharra in terms of the airstrip and local roads. We're also building with our partner APA a gas pipeline to the project, and the work for that has started in terms of the environmental approvals and the final design for that. Tier 1 mining country. We're close to ports. We've got access by road to both Geraldton and to Fremantle, and we have availability of land for downstream processing. We are aggressively pursuing some downstream processing opportunities. At this moment, we put forward that we're the largest single vanadium project globally that's advanced to this stage in terms of the status of our environmental approvals. I'll talk about environmental approvals in a moment. Our conventional flow sheet, which does involve hard rock mining and crushing, grinding, roasting. We haven't got the benefits of Mother Nature that was just presented in the previous presentation, but putting that aside, we still have got a very economic and viable project. Traditional open pit mining, 25-year mine life, and production capacity of 12,500 tonne per annum per year. We're working off a reserve base of 44.5 million tonnes at a V2O grade of 0.89%. I'd like to highlight that we just finished an integration study. We have the Gavin ore body, but we also have another ore body located 25 kilometres to the south of our project, which we call Yarrabubba. And we recently announced the outcomes of that integration study, where we have identified a byproduct of processing Yarrabubba ore, where we have a reserve of ilmenite, 15.8 million tonnes at 10% ilmenite. So right now we're going through an optimization process to deliver, I guess, the best business case for delivering the project with consideration to both Gavin and Yarrabubba. We consider we've got some advantages in terms of our ore body. It is a high quality ore body. It is a thick, continuous, high grade ore zones. We're talking typically 20 metres. Single low intensity magnetic separation. We get very good magnetic recovery, which is the first phase of recovering vanadium, is in fact recovering magnetite and then processing the magnetite. We are in an implementation phase. We finished our DFS in 2019. Since 2019, we've been progressing environmental approvals, and we're well advanced with environmental approvals without now being essentially ready to present to the EPA board for their final assessment. We have our mining tenure. We have committed to design of the kiln. And so FLS are now our partner, and we have commenced detailed design of the kiln. We have committed to the gas pipeline in terms of the detailed design and the environmental approvals using APA for the gas pipeline. We are now looking at updating the DFS cost estimates by going out to commercial competitive pricing, and tenders were issued 2 weeks ago, such that when we receive those tenders, we can then use those tenders and that firm hard capital numbers for the financial model, the new financial model, which we're aiming to have that completed, and we're aiming to have a development decision in the latter part of Q4. We are then aiming to have finance close and commence construction towards the end of first half next year. We put forward that we're poised to commence construction. We have funds in the bank to get us through to final investment decision. We have got a supportive shareholder group, in particular RCF, and a strong board and management team. We're an execution-focused team. We're and focused on that for next year, in terms of building the board, building the executive, and building the team to take this into construction. and the fact that we're out there engaging with constructors as we speak. We have some good networks with the government. We have a good engagement with NAIF. We have a good partner in equipment supply being FLS. We have an offtake agreement with CNMNC. We have a memorandum of understanding and working very closely with Ali Systems for the development of downstream electrolyte production. We have very strong engineers in the form of Geology and Wave, and we're setting ourselves ready to be building this plant next year. So to close off, we are on a rapid trajectory towards net zero. We're part of that. We are setting our sights to commence construction next year. And I thank you very much for your time today.
Thank you very much. Right, markets have closed for the day. Officially, that's it. They're done, all out for today. So we're heading into our final 4 presentations. Remember, by the time the markets open again tomorrow morning, these guys will have all presented, and even our learned friend at the end who is taking us out with his information and analysis. I'm looking forward to that. Yes, that is you. I'm looking at you, Alex. That is correct. But this fella here, as he makes his way to this stage, now I've been chatting with a couple of you who've actually come along today on the recommendation of friends from Western Australia over where we hail to see this talk in particular. This is Dreadnought Resources, and they're about to embark on a very big drilling campaign which may well deliver a number of nickel, copper and rare earth discoveries across its multiple projects in Western Australia. This fellow is called Dean Tuck, and he's here today to discuss what it is that his team is doing to find the metals that we need for our future. Please make him welcome.
Thank you, Christy, and thank you for everyone who's come out today and everyone who's joining us online. It's a privilege to be here at another fantastic RAU event organized by Stu and Prue and team. So thank you guys all. Get this. Make sure I get the thing with Jigger to work. There we go. All right. The Dreadnought Journey to date has been an absolute, privilege. It's been exciting. It's been very rewarding for a lot of our early shareholders. We came about in existence in April 2019. We had a 0.2, 0.3 cent share price, a market cap of 3 to 5 mil. And we came on with an exciting project up in the Kimberley. It's been off limits to exploration since 1978. The last person to step foot on it was Roy Woodall himself in 1958. And we wanted to build ourselves as an exploration and discovery company that took large scale projects and provinces that have been unexplored or untouched for long periods of time and deliver those world-class discoveries that you find in those new provinces. If you look at every major discovery in the past 15 years in Western Australia, you have Nova Bollinger, you have Hemi, you have Julimar. All these fantastic discoveries were all made in areas that were thought unloved and untouched for long periods of time. This is where you make the great discoveries, and that's what's really underpinned our philosophy at Dreadnought. And over the last 3.5 years, we've gone from a 3 to 5 mil market cap with this dream of waving arms and unlimited potential in elephant country. And we first delivered a gold discovery at Metzke's Find in 2020. Took us from a 3 to 5 mil market cap to a 20 to 50 mil market cap. And then last year, June, we discovered high grade copper, cobalt, silver, and gold up in the Kimberley. That took us to an 80 to 100 mil market cap. And just this last year, we've delivered 1, 2, and hopefully more on the way, rare earth discoveries in the Gascoyne region. That's taken us to the 300, 400 mil market cap that we are today. A lot of companies coming up here and speaking about the market and why you should invest in critical metals and the rest. No one invests in Dreadnought for our market analysis and insight. They invest in us because we actually go out there and make the discoveries in the metals that the world needs. So the world tells us what metals need to be found. And the words of Liam Neeson, our team has a very special set of skills, and we use those skills to make discoveries. So it's been a fantastic journey. We have 3 main projects in Western Australia, but what's really underpinning a lot of our success has been on the rare earths. That's where we're drilling right now. We got Luke Blaze out here in the field, out of the field for once. He's actually here at the booth with us. We also have John and Ross from ANU who are working very closely with us. If you have any questions about rare earths, there's an absolute world of knowledge sitting over here. So we have built a fantastic team, and looking forward to talking about that with you. So Mangaroon, we pegged this ground in November 2020. We were about to embark on a major drill program up in the Kimberley that delivered us our major copper gold discovery. Copper cobalt discovery. And we weren't sure if there's going to be success. There's never success guaranteed in exploration. And so we brought in this next province scale project in an unloved region of the Gascoyne in order to see what we could actually deliver from that. And it's safe to say, one, we delivered the discovery in the Kimberley, and two, our newest project has been the outperforming younger sibling. And it's certainly been an exciting last 12 months. We first announced the outcropping rare earth discovery in June. And within 12, 13 months, we delivered our first maiden drill results over that. We originally pegged that ground for nickel and gold and copper. We have a joint venture with First Quantum over that nickel. And once we delivered that joint venture, we turned our eyes with our young keen geos to the rare earth opportunity. We're right next door to Hastings and next producer of rare earths in Australia. We have significant second mover advantage. And over the last 12, 15 months now, we've shown that we potentially have not only the other half of Hastings Yangibana operation, but potentially a whole nother opportunity of the source carbonatites in the region, which not only makes us equivalent potentially to Hastings, but also to Linus with Mount Weld, Mountain Pass, MP materials. It's a completely step change potential. And it's not just arm wavy best targets. We're actually going to commence drilling these targets this week. And so I'm really looking forward to being up here next time in front of everyone and talking about what that's uncovered. So the Hastings Yangibana operation, they've had about 30 years of exploration out there. Since Newmont was involved in the project in 1990, everyone's talked about where are the source intrusions. Hastings talks about it numerous times on their website. And one of the works that we have done is studying Hastings. You can see the upper right-hand corner of the map there is the Hastings tenure. That's 30 years of exploration, identifying 42 strike kilometers of ironstones. And down here on the Dreadnought ground across the Lions River Fault, we've already identified 25 strike kilometers of ironstones that 12 months ago didn't exist because the academics, the GSWA, the industry all thought that the faults, the Lions River Fault, the major crustal scale structure was the termination of the mineralization. It's a tale of exploration older than time itself, older than mining itself. The mineralization almost never stops at the fault. It extends to the other side. And in line with the classic carbonatite model, and what Newmont talked about in the 1990s is when you have the carbonatite intrusions, you tend to form these cone sheets and these radial dikes that shoot out, and they form part of the late stage rare earth pulse and these ferrocarbonatite dikes and sills. And that's what the Yangibana ironstones are. And it was always recognized that these were part of a late stage pulse of a larger carbonatite intrusive complex. But the question was, where were the intrusions? In the 1950s, 1960s, up to the 1990s, Nolan's Bore, Cummings Range, Mount Weld, all the major carbonatite discoveries were made on the back of real intense magnetic anomalies and government data. That government data didn't highlight the mineralization associated with the carbonatites here, because like Mountain Pass in California, these carbonatites have a very weak magnetic signature. And so it wasn't until we flew detailed magnetics over the area to assist us with targeting the ironstones that we were able to identify these ovoid features mapped as limestones. We went out there, kicked over these rocks, and we proved that we had mineralized carbonatites. So not only we've been drilling at Yin, and one of the things that really helps us with a second mover advantage is Hastings has done fantastic work for the last 15 years. They've cracked that metallurgical code. And so we walked in before we even drilled a hole. We were able to collect 80 kilos of outcrop, huff that out, take it to the lab, put it through the exact same metallurgical flow sheet developed by Hastings for the ironstones, and we were able to produce a high quality monazite concentrate before we even drilled a hole into this thing. And that certainly assisted us a long way for this drill program. So already we went into this program, we knew we had good met, we knew we had the monazite, we knew we were similar to Hastings. And so the next question was, how good was it going to be? On average, the Yangibana ironstones, they have about 27 million tons at 1% total rare earths. That's spread out across about 8 to 10 deposits. So they average about 2 to 3 meters thickness, with the best drill intercept being 24 meters at 1.8% total rare earth oxides. Our first 6 drill holes into Yin exceeded expectations by any stretch of our imagination, because they exceeded in thickness and in grade anything that had been hit in this region in over 30 years of drilling. We had over 30 meters at 3% rare earths in some of our first drill holes. Certainly lit a fire under Dreadnought, and certainly the rocket took off at that stage. But we very quickly drilled out, went into that program with Lynn Windebar advising us on the mineral resource work. He did all the original resource work for Hastings. So we had their involvement from day one. So there would be no wasted meters, no wasted samples. And straight away, within 6 weeks of putting that first drill hole into the Yin outcrop, we've already delivered a resource drill out. We've delivered 41 holes, so that 120 have come back from the lab. As soon as those assays come back, we expect in the next month or two, we'll be able to put out our maiden resource over just the first 3 strike kilometers of the Yin Ironstone trend. And then last week, 2 weeks ago, we announced our next target area, the next area of outcropping ironstones. Again, our Sabre discovery. We have announced another trend, multiple kilometers long, up to 20 meters thick of mineralization, continuing to show that we potentially have quite a significant opportunity in the ironstones here. But that Yin trend was only 3 kilometers. That Yin trend has now been extended over 16 kilometers. We have the Y8 trend nearby. We have over 25 strike kilometers now, of which we've only drilled about 4. We're already rivaling the size of Hastings resource base based off of drilling and the estimates put out by Canaccord. But we're about to embark on what's really exciting and what is going to keep me awake for the next 6 to 8 weeks. And that is the drilling at C1 to C5, the potential source carbonatite intrusives for this region. These things potentially host the opportunity to have like a Mount Weld or a mountain pass, a world-class rare earth deposit, 30 to 50 million tons, 5 to 8% total rare earths, has a very small footprint, and they tend to sit within the carbonatite intrusives. So what we have up here is a 160 meter by 160 meter first pass program. The majority of the carbonatites sit under cover, 99.98% of the carbonatites are under a small calcrete plane. And that first pass program at 160 by 160 meters is designed for 1 to 3 holes to hit a world-class deposit. We're commencing that program this week. We have all the approvals in place and the drill rigs available to us. If we make that discovery intercepts, which we'll know in the field, we'll be able to deliver that resource drill out by the end of this year. And then we have a number of regional targets. This is just the tip of the iceberg for this region. It's a very exciting time in the Gascoyne. You've seen a lot of movement with a lot of the other great explorers in the area. Of course, you have Hastings, you have Kingfisher, Lanthanine. There's a lot of great work being done in this region, and we see the Gascoyne opening up to be a significant rare earth producer. And like the vanadium talks earlier, it's all about Australia becoming a major producer in these critical metals. It's a very exciting time for the Gascoyne and exciting time for Australia. Touch quickly, the last few minutes that I have, our first quantum joint venture. We've confirmed that this is a very fertile magmatic nickel copper PGE system. First Quantum has a mandate to make a high grade massive sulfide discovery. We've confirmed that this system is fertile. There are high tenor nickel and copper sulfides. Where there was a wiggle in that intrusion, a small trap site, we dropped out more significant sulfides. We hit them in 9 out of 12 holes in the first program. And so the hunt is on now to find a bigger trap site, a better trap site. We'll be kicking off EM surveys here very shortly with First Quantum, and with the aim to have drill targets by end of this year. All fully funded by First Quantum. And alluded to the copper and cobalt discovery last year in the Kimberley. We had 16 meters at 2.2% copper, an ounce silver, 6 grams gold, and 0.5% cobalt. Very exciting discovery. We see this turning into an Avanco style opportunity, hydrothermally controlled deposits, a camp scale, Cloncurry style mineralization. We were going to be moving the rigs up there right now, but we're going to be dedicated to delivering the resource drill outs on the rare earths and additional resource discovery. Instead, we have 2 auger rigs coming up here to the Kimberley here starting this week. And we'll continue to fill that pipeline full of quality geochemical and geophysical targets that could be Orion lookalikes to turn this into a camp scale opportunity. So by the time we finish our rare earth resource and discovery drilling and commence scoping studies next year, instead of going into an orphan period, we'll take our rigs up to the Kimberley and we'll start delivering additional copper and cobalt discoveries and deliver those resources up there. So we are a discovery focused company at this point in time. We are focused on delivering rare earth for the next 6 to 9 months, prepare the pipeline of opportunities for the copper and cobalt to move up there and deliver additional discoveries if the rocks are willing, and hopefully there were some resources in the back of that. So thank you all very much for that.
Oh, I wasn't sure if you're going to come in for another big ending there. Well done. Thank you so much, Dreadnought, presenting to us. And don't I wish I invested in them 3 years ago when I first saw them. No, to worry. I must apologise down the front here. I've been looking at Ian Bucknell and calling him the last presenter for the day and mistaking him for Alex. So I'm very sorry. I do know who you are, but I don't know why I said that. So my apologies. For the rest of you, both presentations are going to be absolutely brilliant. You do second from last, and then Alex is bringing up the rear, but they're both worth staying for, and then we can have those drinks. Now, the next presentation is to test me and my pronunciation abilities. Rarex is joining us up on stage. They're a Perth-based exploration company aiming to becoming a near-term producer of neodymium and praseodymium to support the global megatrend towards the electrification of society. Am I correct?
That's right.
Fabulous. Okay. So the focus is on developing a project called the Cummings Range Project. That's in WA's East Kimberley region. And today the presenter and founder is Jeremy Robinson. Actually, he's the presenter and founder every day. And he's also the MD. And today he's come to join us to tell us a little bit more. Would you please make him very welcome?
Thanks very much for that introduction, and thanks to Stu and the team for putting on this conference. Rarex is also a rare earths company, very much like Dreadnought, a very, very hard act to follow, but we too have a very compelling proposition on our hands in terms of a hard rock carbonatite rare earth project in Western Australia. So very, very pleased to present this story to you. We're a bit more advanced in terms of our scoping study we put out the last couple of weeks, and also an exploration update out today, which shows you the size and scale of what we have as well. Quick overview of the corporate snapshot. Got about 570 million shares, a relatively modest market cap of $40 million there. Still well funded to do what we want to do this year and well into next year. So might be coming back to the market anytime soon. A very modest market cap. Apart from myself, a very good and well-credentialed board led by John Young, who's had a lot of success in the lithium space, namely by founding Pilbara Minerals, which is the great success of the lithium industry. Also of note there, I should point out Cameron Henry, who is a founder of Primero Group, a successful engineering company in Western Australia. So we've got both the geology and exploration covered, but also the development and engineering covered as we progress this project and move it forward. So what are we and what are we trying to do, and why should you have a look at us? As we're all here for the New World Metals Conference, we're all aligned with the EV electrification thematic. NdPr, as their magnetic properties are very useful in, well, firstly, they're a critical and strategic mineral, but they're coveted for their magnetic properties. They're used in iron, boron, neodymium magnets. Everywhere you have a lithium battery, there's probably a rare earth magnet nearby to power the electronics in that piece of equipment. We've been drilling all year. We're very much focused on growing the size of our resource in our project. We've had 2 to 3 rigs going since April. We'll be there for another month when we get chased out by the rain. We've just put out the first of our results, and we're very pleased by what we're seeing, both with the drill, both visually and with the assays as they come through. And also 2 weeks ago, we announced our plans with the scoping study and how we're going to commercialise our project, both on a rare earths front and also with our byproduct stream of phosphate as well. I'll explain to you the phosphate and what that means to our project throughout the presentation. Firstly, the scoping study. This is what we put out a couple of weeks ago. Fairly compelling economics there. An NPV of 630 million, relatively modest market cap. I know it doesn't seem like it, but it is a modest market cap in the world of rare earths of 430 million. Very competitive cash costs after our byproduct credits being phosphate of just over $6 a kilo, which is very, very low when compared to a basket price of about $29 a kilo US. So we've got a long mine life at the moment, 12.5. It'll be very much longer with the exploration drilling we've been doing this year. And a point of differentiation for us, and I'll show you how we configure the project in a few slides, is but tapping into hydropower up in the north of Western Australia. We plan to tap into the Lake Argyle scheme there and produce a relatively green rare earth product. Here's a map of where we are and how we've broken our project down. Cummings Range is the mine site just south of Halls Creek. We're planning on building a beneficiation circuit there, so relatively simple flotation to make a rare earth rich concentrate around the 20% mark, 15 to 20% rare earths, and truck it up to Wyndham where we can access cheaper chemicals and cheaper power. At Wyndham, we will produce a rare earth carbonate, a mixed rare earth carbonate. That's the minimum viable product in the world of rare earths. At that stage, you've dumped out all the radionuclides and you can take it wherever you want in the world. We can from Wyndham, we can export this stuff into Southeast Asia, into Europe, into the US, and we're exploring those avenues at the moment. As part of the project, we'll produce a phosphate byproduct stream. You may not be aware, but phosphate has gone for a run recently in its price. I'll show you some slides on price and price projections, but due to the war in Ukraine and us putting embargoes on Russia, the phosphate price has also taken off. So we're becoming a joint stream product, a joint stream company, both rare earths and phosphate. I'll touch on the geology quickly, but we are a carbonatite project. We are one of the true carbonatite intrusions in Western Australia. Until recently, there were only two of us, Linus and ourselves. It looks like there's another one coming in Dreadnought, but at this point in time, there's only two true intrusive rare earth carbonatites, and it's us and Linus. Have a modest resource there, which is what we've based our scoping study work on, just under 20 million tonnes at 1.15% TREO, with some niobium and phosphate in it, but we're in the process of growing that and expanding that resource very quickly. Permitting license-wise, we've got our mining lease application underway, we've got our native title negotiations well underway, and we hope to conclude those two early in the new year. So the Wyndham refining facility, what are we going to produce there? As I mentioned, it's a mixed rare earth carbonate. From a mixed rare earth carbonate, you can further refine into a rare earth oxide, but we believe we can make enough money out of going to a rare earth carbonate and then sell it onto others for further refining. As I mentioned, we are tapping into the hydro scheme there at Lake Argyle, gives us access to cheap power and green power, talking 10 cents a kilowatt hour, not the 30 cents a kilowatt hour from the diesel fired. And also producing a valuable byproduct stream as well, which we can sell back into the local community, which gives us our license to operate. There's a very large agricultural sector in the north of Western Australia. Our product mix, obviously high in NdPr. What's probably not known too well is that we were quite strong in Dy and Tb as well, which are the other two magnetic rare earths that make these magnets operate at high temperatures. So wherever you've got an NdPr magnet, you'll need a little bit of Dy and Tb to help these magnets operate at high temperatures. So we think we've got the right product mix that should be attractive to downstream users. So over the next 6 to 12 months, we've just commenced our pre-feasibility study. That'll take us the best part of 12 months. We're planning to stick to our ESG principles, which we're signed up to, which will force us to look at, the lowest carbon footprint in what we do. We do have as I've mentioned quite a few times, quite a strong head start by accessing the hydropower there. We'll look to further electrify our fleet and do whatever we can to reduce our carbon footprint. And also by engaging in our local communities in the agricultural sectors of the northwest of Australia, we think we get that license to operate, and there could be a chance to trade in carbon credits with our project as well. But behind all that, we are very much focused on expanding our resource, and I'll show you what we're doing with the drill bit as well. But before I do that, I should mention we've got a very good team to deliver on our project. Gavin is best in class in rare earth metallurgy. We've been leaning on him. We've got Michael Prassis, who's our corporate development guy, who has spent a lot of time actually in rare earths with Solvay and with Peak as well. And a very good geologist with the head of exploration, Guy Mulang, who's been giving me some results to be proud of this year. So this is a plan of our project. All these dots represent rare earth occurrences. That's about 600 by 800 meters there. That's part of a larger carbonatite intrusion, which is about 3 kilometers by 3 kilometers. This is the bit we've been focusing on. Let's follow your nose at this point for us. The guts of the mineralization, it runs in this northwest-southeast direction. Everyone has been drilling in the top 100 meters. We've stood back and drilled underneath it this year, as you can see by these diamond drill holes. We've drilled 22 diamond drill holes to date, down to about 700 meters is our deepest, and a bunch of RC drill holes as well, chasing some more shallow phosphate out in that direction as well. So we released our first diamond holes today, and what do they look like? This is what we did. This is the hole that we've put out today. We've got quite a sizable intercept, 384 meters at 4% phosphate and 0.3% rare earth. Within that, there are much higher grade rare earth zones within there. I think cumulatively we have about 41 meters at about 2% rare earth. That's our most consistent zone there. 11.6 at 1.9 TREO, but lots of higher grade rare earth zones contained within that. The drilling will get better from here as we move further forward into the guts of the carbonatite. And what this is showing us is we have a very, very large phosphate rare earth system. We think the rare dike, we've had these dikes punch up through the middle of the carbonatite, the peroxenite units, and bring a great flooding of phosphate and rare earth mineralization. So, you know, our current resource of 20 million tonnes, it will be orders of magnitude larger than that as a global rare earth phosphate system. We also put out today where we would put some more RC holes into the system. This is out to that eastern side of the resource. These holes are from surface, 153 metres at 11% phosphate and 0.4 with higher grade zones within that. We get 10, 20 metres at 25, 30% phosphate. Direct shipping ore in the world of phosphate is anything over 25. They dig it up and sell it whole as polars. So 30% is very good. We plan to extract the rare earth value from this as well. And that's part of our ongoing commercialisation of this project. So exceptional phosphate intercepts in their own right, but also carrying very good rare earth grades, which a lot of rare earth explorers would be more than proud of. I will touch quickly on the markets in which we operate. NdPr is a key enabler of what's going on in the world. We're all here for the new tech metals, but NdPr, as I mentioned, are very useful in these magnets. Main drivers are EVs, your electric cars, Tesla. I think the high-end Teslas have 3 of these motors in them. In all your phones, all your electronics, there's NdPr. Beyond that, the big growth sector is offshore wind turbines. This is a sector that hasn't really caught on yet, but if you want to put renewable power out of people's way and where they can't see it, put it in offshore wind turbines, especially floating ones. This will be an area that grows exponentially as a main contributor to our renewable power source. And you need very large rare earth magnets in those. So that'll be a key driver of use as well. Probably won't spend too much time onto this, but you know, the global mega trend is underway. We're all going electric. Our governments are incentivizing us to do it. The OEMs are investing in it, and the spend is astronomical. It's hard to see where we're going to get all the lithium and rare earths to fill these orders. What does this mean for rare earths in terms of a market? It means the demand is just going to outstrip supply astronomically. We see the need for a deposit the size of Linus to come on every 2 years. At the moment, I can't see one deposit the size of Linus coming on in the next 5 years. So this is a space you want to be invested in. Quickly on phosphate, what's happened, as I mentioned, historically, this is a fertilizer business. It's a well-established market. You know, we've been putting this stuff on our soils for a very long time to increase productivity. You've seen the price spike to 320. I think this month it's up to 350 US. And this demand was underway. It's been accelerated and exacerbated by what's happened in Ukraine and Russia and the embargoes that are going on there. But increasingly, you will see use for phosphate in LFP batteries, lithium iron phosphate. This is the increasing chemistry that's taking over as a democratization of EVs takes force. They don't have quite the same energy density, but they last longer and they're cheaper to produce. So expect this chemistry to take over. We think phosphate will be a really nice adjunct to our business as a rare earth business. So to summarize it all, look, we think we got the timing right with rare earths. This will be an astronomical growth story. We're trying to decarbonize, and you can't do that without NdPr and rare earths. You know, prices are higher. We expect them to go higher. We've got a well-funded company at the moment. We've got the right project. We're delivering results with the drill bit. We've got a scoping study out there that shows with what we have right now, we can deliver an economic proposition. We'll make that very much larger, and you know, we'll turn this into a mine in the coming 2 to 3 years. So right team as well. We're very much focused on growing our team out. You do need the right team in these markets, and you know, we encourage you to come and have a look at Rarex. We think we've got an exciting proposition, and thanks for listening.
Jeremy, I'd just like to say you got a bit more of a spring in your step since last time I saw you present. And when I was looking up at Rarex today, Rare Earth Today on the, I just put a news search in for it. Ping, ping, ping. It was everywhere. You must be a happy little chappy today. Well done. Congratulations. Right. Second from the end. This gentleman here, Ioneer Limited, is the owner of the Rhyolite Ridge Lithium Boron project, which is located in Nevada, USA. It is the only known lithium boron deposit in North America and one of only 2 such known deposits globally. So as such, it is expected to become a globally significant long-life source of lithium and boron. In September 21, so a year ago, they entered a 50-50 joint venture agreement to advance the Rhyolite Ridge project. Now they've added binding lithium offtake agreements and they retain project management. So things are looking pretty good. And here's another happy fella to end off our day for us. This is the CFO, Ian Bucknell. Would you please make him very welcome?
Thank you, Christy. Thanks, Stu and Vertical Vents team. And thank you to you guys for sticking around. I know it's late in the day, so we appreciate it. And we're pretty excited to be able to talk our own story in Ioneer. It'll be familiar to many of you, but for those of you who don't know who we are, Ioneer is an emerging lithium and boron project. We're in the US and we're nearing the stage where we'll take a final investment decision, but I'll talk more to that. I'll flick through this, let you read that in your own time. Of course, you can get this presentation off our website. These are the areas I'll cover today. I'm going to flick through a number of slides. So just because I know time is short, but there is further reading there. A quick snapshot of who we are as a company. You can see we're well funded. We are funded through to where we expect to be able to take our final investment decision. We have a market cap of somewhere around $1.4 billion at any stage, and a number of large investors in us that are US based, and Sabanye there who got mentioned that are coming into the project with us also provided some capital for us when we brought them in. We've got a great team of people that have done these sorts of developments before. So in our chairman, James Callaway, he was the chairman at Orocobre and saw that project into development. Alan Davies, who was previously in charge of the division that oversaw boron within Rio. And Bernard Rowe, of course, the managing director, who would ordinarily be doing this, but is currently in the US. But we have ESG specialists in Rose McKinney James, and Maggie Walker there, who is a chemical engineer by background, has built quite a number of projects, and Steve Gardner, who only recently joined us latterly of Oil Search and a finance specialist. And a management team. Obviously our team is growing as we look to build out the project and the capability to deliver the project. We surrounded ourselves always with the right partners. So we've sought to find best in class, whether that's in our sulfuric acid plant in SNC-Lavalin, whether it's in Caterpillar, who we've just signed an autonomous agreement with to run autonomous vehicles in the mine site. And Fluor is our EPCM, and will be helping to construct and deliver this project as we move forward. So to the project itself, just to help orientate yourself as to where we are in the United States. We're ASX listed, of course, but the project itself is in the United States, in Nevada, about halfway between Reno, where we've got our office, and Las Vegas, on the border with California. It is a great location to have a mine. We're on federal land, and it's federal land because it's never had another use for it. It's not arable land. So we're really in that place where you'd want to build a project like this. And we've got huge community support where we are as well. We delivered a bankable feasibility study back in April 2020. The numbers are there. You can see that this is a very profitable project. I would caution you to say that these are April 2020 numbers. The CapEx will go up. Equally, the OpEx will go up, but the inputted realized price for lithium will be substantially higher as well. And we're working on that now. We hope to deliver updated economics around the project early next year as we walk towards the final investment decision. We are the most advanced lithium project in the US, and that is for these following reasons. Permitting wise, we require 3 key permits, and we have 2 of those. We have our air and water permits in hand. This permitting has been the thing that has delayed our project. And the third permit, the plan of operations, we recently resubmitted to the government. There has been a huge change in government in terms of what they are looking for from companies such as ourselves. And you would have heard some of the narrative coming out of the Biden administration, the need for them to build the domestic supply chain in the US. So we've seen a great change in government and a lot of support coming, bipartisan support at that. I'll talk a little bit about as we move forward. We've recently signed binding offtake agreements with Ford and with Toyota Panasonic joint venture. We've now completed all of the offtakes we require to support the debt financing of the project. And we are now, well, on the funding side of things, we introduced Sibanye. They, in effect, cover the equity portion of the capital stack that we need to finance. And we are now also talking with the Department of Energy, the Loans Program Office there, and making great headway there as we move forward. And on an engineering side of things, we're well advanced. We've been placing all of our key contracts, and we expect to have that all in line with when we bring the project, or we get final permitting and take our final investment decision. So you've heard from a number of companies talk on ESG. It is highly important for any mining company these days. And we have the advantage as we're a project to approach it with the very best thinking, benchmark thinking as we come to it. So as we've thought through the project, we've been able to build in to the engineering low emissions, low water usage. We have a small mine footprint. We're going to be using very efficient equipment. I talked about some of that autonomous equipment that we'll have there. And we have a real commitment, as we all need to have, to sustainability. It's at our core. It is our mission to provide the products for a sustainable and thriving planet. So we don't take this lightly. It's at the core of what we do. We're already investing millions of dollars in a rare plant that we have at the site, and that plant's survival is guaranteed by this project going forward. Just on the markets, you would have seen a lot of graphs like this. I could have chosen any number of banking graphs, but you know that the demand is projected to absolutely go through the roof, primarily driven by EVs. That's the demand of lithium. Where's that supply going to come from? It's not easy. It's our own experience that projects take time to develop. And so even if we saw all of the projects in the US currently muted get off the ground, that's not going to be enough to meet the demand that's coming. Just focusing then in on the US, there's huge investment going in at the moment. All those dots are where we've got battery plants being built, the cathode manufacturers and battery plants being built. And that's what we call Auto Alley. They're being built right next to where the OEMs, the car manufacturers, are putting their plants. And we're there on the West Coast, not too far away, able to supply into that. I talked about bipartisan support in the government. We've seen in recent months the Inflation Reduction Act, and that's all focused on developing a domestic supply chain in the US. Even with these projects coming online in the US, they'll still be highly dependent on projects from around the world. Boron, you'll know a lot less about boron. It is an industrial mineral. It goes into all of the different uses you can see on that wagon wheel, and it is a critical mineral. For every ton of lithium we produce, we'll produce 9 tons of boron. Now, we've placed all of that boron as well, that boric acid, for the first 5 years of production as well for our project. So both on our lithium front and on our boric acid, we've placed those materials through binding offtakes. And boron's, you would have heard already, it's used in magnets, it's used in electric vehicles as well as both strengtheners in the magnetics. So just in terms of recent achievements, we did list on NASDAQ on 30th of June. That's part of us as a developer of a critical mineral in the US, wanting to see more ownership in the United States. There's huge demand there. We rang the bell recently there. It's a great occasion, and that's helped also push our share price along somewhat. I touched on the offtake that we've done. We announced an offtake with Ford Motor Company, so we've got the apple pie company there already. They're helping us on the hill to push Ioneer and the Rhyolite Ridge project. And we also did a deal with PPES, which is a joint venture between Toyota and Panasonic. And prior to that, we'd done a binding offtake with EcoPro, a large Korean cathode manufacturer. So in all of that, these contracts, binding offtake agreements, support our debt position. They do have a collar structure in the two later ones that we've done with Ford and PPES, and that will support the debt that we've got coming. So just in terms of next steps and news flow, we have on the project funding side of things, I talked about the fact that we are in discussions with the Department of Energy Loans Program Office. As far as we're aware, we're the only lithium company that is in the due detail stage of discussions with them. We actually expect in the next month or so to know whether we've been successful in that process. If we are successful, we'll have access to 10-year bond rate style money, and the tenor will be about that 10-year timeframe as well. Our project itself has about a 26-year mine life, so this is long life, and we have plenty of expansion potential. Now we don't have all of our eggs in one basket. We've also been working with Goldman Sachs' help with a group of commercial banks, project financing banks. We've been bringing them slightly behind the DOE process that we've been running. Detailed engineering, I touched on the fact that we'd placed quite a number of our contracts, all the key contracts that we need to put in position. They are two-speed contracts. So the initial stage has been to ensure that all the vendor engineering can be done. That's desktop style work, and that enables them to provide us with the guarantees that we need around performance of the products or services that they'll be providing. And what we're now trying to do is align the timing of this to be construction ready for when we get our permitting to come through. And I'll finish on these permitting slides. And that is really to say that we've got the 2 of the 3 permits in place. The third one, the plan of operation, we anticipate a notice of intent to be published within the next month or so, month to 2 months. And from that point, there should be around 12 months of public discussion, which will take us through to what they call a record of decision. At that record of decision, assuming that it all goes to plan, we would then be able to access the land and start our construction process. And it would be about a 2-year period of construction. And so first, we're now thinking that that would be time for late next year, 2 years of construction. So our first production, 2025, end of 2025. So there's some of those milestones I just talked through. Just in terms of a summary, we're in the right commodity here. Lithium is one of the few commodities that's been able to weather the current storm. We see that demand continuing. We're in the right location in the US, which is desperate to see a domestic supply of lithium to support that second largest car market in the world. We've got an experienced team. We've got near-term news flow with some important milestones to be reached in the coming months around funding and around our permitting, and then a clear path to production. So please join us on that journey.
Thanks, Ian.
Thanks.
Thank you very much, Ian. Appreciate that. Right. Can I just ask very quickly, do we have an Anne Stuckey in the room? Is Anne Stuckey in the room with us? At the back? Anne Stuckey. And Anne, if you can just see Prue in the white for a second, she's just got something for you. That would be lovely. The rest of us, though, we've got one presentation to go. Now, I'm going to go back to our good old Eddie Rigg at the start of the day. And when Eddie had a chat with us, he made his opening presentation saying one of the facts he pointed out is we all need to understand that the metal intensity going into energy delivery in the new age is exactly that, intense. EVs need 3 times more copper than traditional combustion engine vehicles, he said. Wind farms, 9 times more minerals to construct than an equivalent gas-fired power station. And when Jeremy came up and spoke a moment ago as well, he had that slide that showed just how hungry our new tech is for the rare earths that they'll be supplying. So for us, it means that there is more than enough scope for us to make a bit of money with all of these minerals, obviously, to meet this growing appetite. So our last speaker today wants us to look at the way we can really capitalise on the riches of our nation and those minerals that we'll be taking out of the ground. So to finish the Sydney leg of our New World Metals Roadshow and summarise the day, would you please welcome from our corporate sponsor, CRU, Alex Tonks. Now, Alex is, before you clap, He's three important things. So he can really cover off on all of these. He's a mining engineer. What's the last? He's a mining engineer. He has a Master's of Commerce. He's a rampant underachiever, actually. And he's also a chartered financial analysis. So he is the perfect person to end our day. Please make him welcome, everyone.
Thanks, Chrissy. And thanks for the chance to talk after many great presentations today. I'm going to try to put in context, I guess, the scale of opportunity that's on offer for Australia in modern minerals or new age metals. And I'm going to talk through three areas. One is EV demand, decarbonisation. The second is what that means for Australia's exports and the shifts there. And then lastly, the potential for Australia to move downstream and add value. So just firstly, what is CRU? CRU is a mineral economics firm. We are purely focused on covering the metals markets. We do not cover oil and gas, I should say. We have around 400 analysts globally, and they're broken up amongst commodity lines. And basically there's two key divisions. One is analysis and the second is consulting. And a lot of the data and the charts that you see come from those two divisions today. Typically consulting works with a number of areas and supports many of the companies you see here today through the practice areas I've listed on the screen. And we not just work with producers, but we also work with consumers, particularly in Asia and Europe, banks, and also governments. So if we start here just to set the scene and we look at all the commodities in which we cover and forecast and take last year's average price versus the full year forecast for this year, it's not a lot left in terms of that. But what you can see is that it's a pretty abnormal environment. All the commodities that we cover are extremely hot, and that's unusual in that normally this chart is far more balanced. And so we really have very, very tight markets across the board. It's not just the war in Ukraine and some of the supply side issues we've seen as a result of that, but we do obviously have a demand side shock from what's been very, very loose monetary policy over the last couple of years. I'll focus today on some sort of longer term themes though, and particularly, I guess, some of the impacts from energy transition. But what I would say is that there are a couple of themes that are clearly impacting all markets, and the first probably is geopolitics, and that's going to play a much greater role in the metals markets than it previously had. Previously forecasting base metals and bulk commodities, you really didn't have to worry about it that much. It was something that was very much isolated to the energy complex. It was obviously very prevalent there for many decades. But it's not just the sort of war in Ukraine and the sanctions, but critically, it's I guess the dominance of China, particularly in downstream processing of the transition commodities. So when we look at when we look at all the commodities that we cover here, what you can see is the ones in red are particularly stressed. Now, these are the commodities that are really required to support a low carbon future and an energy transition away from coal, oil and gas. And many of these markets are very, very small, and they're already in very short supply or have processing risks as it relates to China. So copper, nickel, cobalt, rare earths are especially at risk, but also lithium. They're very limited chance for substitution in those commodity markets, and they're already seeing constraints either through geology or processing. Now, turning to decarbonisation, obviously most countries announced net zero targets of 2050, China net zero in 2060 and India 2070. One of the challenges when you're doing long-term forecasting is that how that transpires and the pathway to that is not particularly clear. We do run multiple different scenarios when we look at those pathways. But what I would state is that really none of those targets talk about or even mention demand rationalization. And really that means that the supply side, and particularly the transition commodities, are going to have to keep up. So forecasting those pathways is a challenge. And one of the things that we've spent a lot of time doing is developing what we call carbon abatement curves. And so these are very similar in nature or construct to cost curves that many of us are used to in mineral economics. So the size of the block here represents the carbon emission savings, and the height is effectively the CO2 price that's required to incentivize that investment. So they've been constructed by using estimates of CapEx, upfront CapEx and technology conversion costs, as well as allowing for operational costs of the new technologies relative to the old one. Now, what you can see is that firstly, that both in Europe and in China, to move to low carbon technologies, there's a cost associated with it. But really what's important from these curves is that it prioritizes those costs. And so on the right-hand side of those curves, the very, very expensive and very, very difficult things to abate are things like steel manufacturing. There's a lot of talk in hydrogen-based DRI production and what that means for Australia, etc. But the reality is that's a very, very expensive way to reduce emissions. In both of these areas, what you'll notice is that the cheaper way to reduce emissions is to decarbonize the grid, obviously, with things like solar, wind, and EVs. And of course, they're extremely materials intensive. There's a few nuances between the two. So you'll notice that EVs are a little bit more expensive in Europe than they are in China. No surprise there. But generally speaking, what you see is a lower curve in China than in Europe. It's effectively going to be cheaper to decarbonize China because of its very, very efficient low-cost manufacturing and its lower capex in converting some of these technologies than in Europe. But really, I think the key point is here is that you are going to see continued focus, no matter what those pathways and trajectories, on wind, solar, and the decarbonisation of the grid. So if we turn now to, I guess, what that means for the demand profile for these commodities and Australia's exports. Clearly, Australia's exports are dominated by LNG, iron ore, coal. Now, what you can see of the commodities that we cover on the right-hand side there, iron ore basically has a flat demand profile over the next decade. The coals are slightly negative. I should add, though, that whilst we do have a fairly flat outlook for those commodities, it doesn't mean that new mines are not going to have to be developed in both of those commodities, particularly in Australia over the next decade. Australia has an extremely low-cost position in all the bulk commodities and a high quality position as well. And given mine life, many new projects are still going to have to be brought on in those commodities. But the key point here is that on the left-hand side, you can see the compound annual growth demand forecast we expect for lithium, cobalt, nickel, rare earths, vanadium are really pretty exceptional. If we put that in context, on the left-hand side, sort of in a global picture, what you can see is that, clearly the coal markets and iron ore markets are massive, but they are shrinking on a 10-year view in terms of scale. The high growth markets in terms of cobalt and lithium, vanadium are obviously very, very small still, but growing quite quickly. On the right-hand side, what we've done is taken our forecast for volume exports and our long-term prices and transpose that in terms of what it will look like for Australia's terms of trade. And what you can see here is that the value of iron ore at the moment is still high and we have very good volumes. By 2030, though, we expect the value of that to be quite a lot lower. There's really not a lot of shock from a volume perspective. Australia will still be exporting 900 million tonnes of iron ore, but we do expect those to revert to long-term prices, which is substantially lower than today, which could produce a terms of trade shock. And the similar story in coals, but not as extreme. Now, what you'll notice on the right is that the smaller commodities, whilst they are very exciting and do have substantial growth, we do expect continued growth in lithium supply, nickel, and vanadium, particularly out of some of the projects you've seen here today. But realistically, even assuming quite healthy long-term prices, for those to make a terms of trade contribution, it's going to take quite some move downstream to offset any terms of trade shock from iron ore. So just looking a little bit more detail in terms of the demand forecast, Clearly, when we look at lithium, it's all about EVs. EVs account for about 85% of all the demand growth in lithium. EV sales globally were up 50% last year, 93% this year. And I think really importantly, areas like the US with those longer distances are starting to see really, really good uptake. Also, most manufacturers now this year and next year start to have a lot more on offer in terms of drivetrain. So we do expect continued growth in that market, as you can see, over the next decade. In terms of a little bit more detail about how that lithium demand is broken down, we do see some differences occurring. LFP retains quite big market share, particularly in areas like China and India, which are focused on the lower cost batteries. But NMC 811 gains share, particularly in the outer years, due to its high energy density and in markets that are prepared to pay for that, like the US and Europe. And what that means is that you end up with a slightly higher demand forecast for hydroxide in the outer years than carbonate. But nonetheless, you're looking at a 15-fold increase over the next 2 decades. Clearly, the Australian miners have seen this and are set to benefit, particularly from the hydroxide story. Australian exports are going very well. We expect an 85% increase this quarter on last year. So Australia is, performing very well and is capturing the upstream story. But can it move downstream? And I guess the key question is there's lots of debate in the press around can Australia add value? And, we have a very dominant position in lithium, but also a great position in nickel, cobalt, rare earths, and vanadium. And all of those present an opportunity to add value. Now, Australia has really shied away from downstream processing in the past, particularly on the bulk commodities. And that's quite logical, given that steel margins particularly are very low. The global steel industry only returns about a 5% EBITDA. It's a very, very flat cost curve. But we do think, in the case of lithium, there is a case for moving downstream, and it has to be a step-by-step approach. If we look here at our cost curves, what you can see is that on the spodumene side, Australia is very, very competitive. It dominates the bottom half of the cost curve. Clearly, Australia is very good at mining. But actually, on the hydroxide side, we are also very, very competitive. There are 1 or 2 higher cost operations that are ramping up and will move down. But Australia is certainly competitive in hydroxide already. Now, if we to look at the hydroxide story and just isolate carbonate out for the time being, in hydroxide, as we mentioned, we have about a 25% compound annual growth over the next decade. And if we look at that cost curve, the hydroxide curve, where it stands today versus where it has to be in 2030, you can see the difference. There's not many commodities that look like that. And that just shows the scale of response that's required globally. And obviously, it's a significant opportunity for Australia. Now, that cost curve may move up or down, but the point is it has to expand very, very rapidly over the next 7 years and even beyond that. On the right-hand side, what you can see is Australia's exports again. Now, this assumes all the projects come on in Australia. It's a 2030 number. And obviously, if we export only spodumene, it's still going to be a fairly small industry from a terms of trade perspective. If you can move that through to hydroxide, you end up with an industry just shy of sort of $10 billion of exports a year. But if you can move that through potentially to an NMC 811, but even failing that through to cathode active materials, you end up with a much, much bigger industry. And here, assuming 811, you end up with an industry of around $30 billion, which is about annually, which is about the same size as Australia's met coal exports today. So just to wrap up, we do think there is a big opportunity and Australia can move downstream. What we will likely see is that the level of vertical integration is going to vary probably quite substantially between some of those commodities. The economics of moving downstream for Australia can obviously be supported by reduction to power costs, reductants and reagents as well, and that's something we have to look at. And clearly, geopolitics has been a driver of regionalisation of supply chain, but we think there is also an economic case as well. I'll leave my comments there. Thank you very much and happy to take any questions.
Does anyone have any questions they'd like to ask? Anyone at all? I'm happy to wait 1 second, see if my knees will get down there. Introduce yourself and ask a question, please, Kev.
Hi, Keith Good. What percentage of lithium demand do you expect to be satisfied by recycled batteries by 2030?
Yeah, it's a good question. By 2030, the number is very, very small. I couldn't cite the number off the top of my head, but it's less than 10%. Beyond that, we do expect lithium recycling to increase, but it really is a long-term story. It's not a particularly easy commodity to recycle. It is being assessed. You know, there's work going on in Europe looking at it now, but it's not a near-term story, is what I'd say, or even a medium-term story.
Alex, thanks for that. Alex, thank you for that answer. I've started drinking. We haven't even started already. And Keith, if you check the Vertical Events website, we've got a presentation from one of our companies at our Perth version of this conference, and they were presenting about that. So it was a really interesting one to look at for potential investment. And there are a lot of facts and figures in that as well. Would you put your hands together, everyone, for Alex Tongs bringing up the rear today? Thank you, sir. Wait right there. Oh, he's one of ours. He's off in his way. Okay, 26 presentations today. Big thanks to the Fullerton for hosting us. Our first ever Sydney New World Metals Conference. A great success to yourselves for your attendance. Thank you so much for coming along. Please feel free to spread the word. We do have another conference which is being held here in Sydney. It's our Techno Conference. That is on the 9th of November. And if you would like to be involved and come along to it, then please jump onto our website again. Prue, is that the easiest way to do it? And follow the links and we'll sign you up. More fantastic investment potential people to hear from. And of course, will be great food in our company as well. And if you need any of the information from today's talks, they'll all be available on our website. As I said, just give us a day or so because we'll be rushing to get to Melbourne tomorrow. But we've got a YouTube channel now attached to our website, so just click on that and follow it through. And all I can say is thank you so much for coming. Come and join us for a drink. And we look forward to seeing you next year. Thank you, everyone.